GKFX Prime presents the Market Analysis Webinar.
Hello everybody, welcome to another edition of the weekly webinar. So there's some big moves in Bitcoin going on. We've seen a weekend crash in Bitcoin. We saw a strong finish last week for the US dollar, some signs of a reversal. I know I've said that before and it hasn't materialized, this time potentially. We're getting a little bit of an overnight sell-off in stock markets too, and not to mention a huge collapse in gold on Friday. So a lot of price moves happening here, so let's get into it. So let's start with the euro, probably the more mundane of some of the price moves going on here, but it has broken down through these two rising trend lines that we highlighted as critical last week. You can see pretty much this 122.50 was the kind of crunch area where we saw a bit of price action going on, a bit of ups and downs as the price tried to hold on, and eventually we had this bearish engulfing candlestick on the 4-hourly chart, and it carried us down through and below 122. So where from here? It seems to me that having broken these two trend lines and having failed to make much kind of meaningful upside beyond this kind of area of resistance here, this looks to me like a kind of failed breakout. Came back down to the rising trend line, was unable to capitalize on that. I think having made this move, my assumption is we got another leg down. I can't particularly see, well, I suppose the main reason is these highs through here is pretty much why we've paused at this level. So there is some historical significance to where we've paused here. But if you see that we kind of broke up, came down, basically tested this area before, break all the way up. Now for the last 3 days, we've come down and we've kind of tested that same range again. To me, this whole big move higher needs a slightly larger correction. I've been talking about that for a while. It hasn't really materialized, as I said at the start. I think maybe now it is. And it doesn't have to be too far, but in the great context of things, you can kind of see, a couple of weekly reversals there. It seems to me that we're probably on for a test of 120. But even if we don't get to 120, you can see that this low through here, which is just under 121, that seems like quite a neat target connecting these lows through here. So that's basically 120.50, I believe, and I've meant 120.70. And so what we ideally want to see is some kind of bounce off this form of resistance and support, some distance ideally above 122, and then maybe we come into the lower end of this kind of cluster of price action through here, and then drop down again. So that's the kind of scenario I'd be looking for on the expectation that we see more declines here. Now obviously, generally speaking, we're well above the 50-day moving, if I got it set as a 50 or something else, yeah, 50-day moving average. So the trend, strictly speaking, according to the moving average, is still up here, so that's why we need to be a little bit cautious about selling while above this 50-day moving average. But to me, that's part of the explanation for why the price needs to come down. It just needs to come back down towards its average. When the price gets too far away from the average, at least it needs to tend back towards it. On this occasion, it didn't. Here, it got very far away from the average and then just went sideways until the average kind of caught up. So we might be in for something more like that, like a bit of kind of. We've almost been in it anyway, kind of range trading, and maybe just a bit more flat. So that's the outlook there. We are down for 3 days, so strictly speaking, this is a, if you're of a different mindset that the trend is up and you want to find an opportunity to buy in, well, we've had 3 down days, and we're down at this old support just under 122. So it's an opportunity here, but my feeling is that we kind of roll over and we probably don't get back towards this cluster around 122.50. We get a little bounce and roll back down again. That's my central scenario for euro dollar. And you'll see why as I move through to these other currency pairs that there seems to be a bit of a tendency here for the dollar to be showing some strength. Now I'll move over to the British pound here, and you can see this is our 4-hour chart. Again, similar sort of action that we saw on the euro with basically a false breakout. We had the resistance here just above 136. We broke higher, just tagged 137, and then a nice little tweezer top pattern here, combined with a bearish engulfing right back into that previous support. We dropped down. We've gone sideways since, but we have now taken out this support area, and to me that's a bearish sign. And I think, excuse me, a very good setup here would be if we could come up and tag that old support. That would be a way to trade the move lower. Now we do have to keep in mind that we've got this big blue zone in here. This is our 134 to 135 zone, which is obviously our long-term kind of resistance that the general idea is that we're breaking out from. So again, with that idea that maybe we've got a bit more further to go on the downside, but maybe not much further if we're keeping this bullish structure. And so for that reason, we're bouncing just above this, just above the area around. Well, we're bouncing from 135 basically. Maybe we can bounce, roll over, hit 134, and maybe maybe we're done, and from there we can continue the stronger price action. But it looks a bit sluggish at the moment. It looks like the dollar's trying to fight its way back a bit. It's hardly it's hardly a blitz of dollar buying. The sentiment out there is pretty bearish on the dollar. But so that makes sense that there wouldn't be a rush of selling, but we may be gradually rolling over here, and obviously the selling picks up. The buying of the dollar, the selling of these major currency pairs would pick up once more of a downtrend emerges. Right now we're still pretty much in uptrend territory. If we do take out this shaded area, which again we haven't even dropped that far yet, down to 134, but just think of 134 as a bit of a line in the sand. If you're short from up there, you either take profits or you take some profits, and then you wait to see if we can actually break lower, in which case we might have to come and tag this long-term rising trend line through here. So all the time we are feeling a bit bearish here. We're keeping in mind that the kind of general scenario here for the pound looks very positive above this rising trend line, this long-term rising trend line, breaking out above the 134, 135 zones, all pretty bullish. But obviously we're day traders here. We're just looking at the fact that we've had a false breakout, we've broken through support. Seems a little bit bearish in the short term. And obviously flip side here for the dollar yen, and it's becoming a bit of a kind of laughing point now, having this channel on this chart for so long. I don't remember a channel being in place, such a clear channel being in place for so long. Now we've had this kind of false breakout kind of down channel. I think I drew this in last week, but if we do actually draw through this low, then you can see through here that actually 1, 2, call that a 3, this is the 4, and then the research team mentioned in their morning note for Monday that this is a bullish engulfing candlestick off the 103. Look, we've bounced off 103 several times. 103 very much holding as support here, and this has been the most bullish rejection yet of 103. We've just not been able to get through it. It looks like it could be a significant base for the price here. Now we'll only know if it actually is if we can get above the previous major base, which is just that what is it, about 104.50? I just forget. Yeah, pretty much 104.50. That's the real test. But if we do get a move beyond this channel, it's only happened pretty much once on a daily basis, so that would be significant if we can get a close above there by today. The bullish engulfing candlestick on the weekly chart would suggest we are, and the fact that we've nicely tagged this declining trend line through the lows, and obviously declining trend lines through lows aren't the most reliable, because normally the trends can often accelerate faster than that trend line. So the fact that we've just kind of we were in a faster downtrend in this channel, and it seems to have slowed up a bit, and it's respecting that lower trend line. It's a fair bit of evidence stacking up now that that this dollar yen is basing out at 103. And probably the last thing to take note of is on this daily chart, we've had a very stiff resistance at 57 level on RSI. A move through 57 on this RSI, I think, will be another indication that this downtrend is reversing, and we're at least out of this channel, and then once we're out of the channel, then we can start talking about potential moves to the top side. Moving over to the Aussie, it's been one of the more stronger currency pairs. We're still above our rising trend line here on the 4-hour chart, so still very much uptrend territory. But something to note on the daily chart is that we made a significant higher high here, but a lower high on the daily chart in overbought territory. So this is a classic divergence trade that we're seeing at the moment. The top is in, we're rolling over, we're only 100 pips off from the high, and this has been a decent rally. If you say right from the bottom here, this was basically the 70 level. This is an 800 pip rally. We're only 100 pips off from the top, and we've got a bearish divergence. So that's quite a nice setup. That's quite a nice bearish setup, actually. Counter trend bearish setup. As I said, obviously it's counter trend, so the trend's still higher. Certainly can push to the top side again, but here you see break to the top side. Okay, pull back to the resistance as support, as you'd want to see. Oh dear, lower high breaks the support afterwards, now below the 50 period moving average on the 4-hour chart, and then I think we just saw, oh no, it's still well above it on the daily basis, but that could be a target to the downside again. It just got a little bit further away from the average, maybe just needs to correct. The average moves up a bit over time to catch up with this price, and the price itself moves down, and we get a bit more back to, we basically get a reversion to the mean, and that reversion to the mean could be a bit of a kind of theme here in terms of the US dollar. So quite a decent counter trend bearish setup here on the Aussie. Now, one of the more dramatic moves, gold, as always. So I've reconstructed the Fibonacci's on this gold chart. If you remember last week, we were talking about the break to the top side. We said, I said this 1950. That I even had it. I had the zone drawn in, something like this. I said that would be a tough zone to get through, but nonetheless, I was positive. I thought we'd broken through this declining trend line, gapped out of it, moved up to 1950. It was all looking quite good. I thought we'd get a pullback from there, which we did, back down to 1900. That was a decent little setup, but we soon knew that we were wrong on that. On Friday, we just completely collapsed. And as we've opened on Sunday, we've even fallen a little bit lower too, and we've tested this low from whenever that was, earlier in December. And we also happen to have tested this rising trend line, which I've just been looking at as a trend that's basically started, and if we just but discount the unusual crazy volatility in March when the market sold off, you kind of see that gold was kind of made a low, made a higher low, made another higher low, and then actually as we came up and we pulled back to that 50% Fibonacci before, that was actually in line with this kind of original trend. And actually where we've stabilized now is also again in line with that kind of original trend, at least on a kind of closing basis, right? So roughly speaking, this has been the kind of speed of this gold trend if we discount the kind of March madness. Now if you look at that massive weekly bearish engulfing candlestick, I'm positive on gold medium term, but I don't want to be trading against that bearish weekly engulfing candlestick. That looks ugly. That looks very bearish. So to me, we had a rebound off the lows here. It's really just a matter of picking your spot, I think, trying to find where this downside momentum can pick up. You know, logically it would be actually tagging the underside of this declining trend line, but you can see the trend line didn't really do much on the downside. You can obviously pick out your Fibonacci levels. The 50 comes in above, it's kind of near these old highs here. It's above the trend line. Let's see if it's a very weak market, you can add in maybe not the 23 but the 38. The 38 comes in a bit lower than through this high, and so that's a possibility. Something like just a little bit up from here, 1870 could be a consideration, but obviously 1850 is the big round number. That's what we're testing at the moment. And for that, I don't know, there's not going to be too much demand to buy gold after that collapse. You know, here's a very equivalent situation. We've basically been through this scenario a couple of times before. Huge sell-off from 1950 down to 1850, and then we make our way back up. Huge sell-off from 1950 to 1850. We actually even go further down. Huge sell-off from 1950 to 1850. So yes, literally we've been through this two times already, and we've survived it the previous two times, so maybe we will again. Keep an eye on this long-term rising trend line. If that gives way, then it does seem like we're reversing our kind of bullish trend that we've been in since early 2019. So then we, you know, the 50% are the old lows, obviously the first target. Then we could be coming down looking at a 61.8% pullback of this big rally that we had since March. So a lot going on in gold. Very bearish week last week. We've had a couple of scenarios that have been similar. Let's see how this all plays out. Let's move on to oil. On the flip side, oil looks very positive. So we highlighted on several occasions in the past this 50 level as a natural upside target. We've blasted through it on the upside. Now we're pulling back a bit. So we basically, you know, what I would want to see, you want to see those old highs ideally hold. You know, it's okay. Old lows rather. You know, this is a weekly basis, not super accurate, but something above that 50 level ideally. You don't even touch 50 to really stay bullish, or maybe 50, or maybe this previous high here. You kind of want to pull back into that zone. Worst case scenario in terms of maintaining the uptrend, you want to kind of hold on to this rising trend line through these lows, although that would be a bit of a deceleration, because this is you know, a certain speed trend. We've had an acceleration, a breakout. You don't really want to decelerate back to the rising trend line, but it would still be okay. It would still be within a kind of bullish context for the price to then pick up again. And you can see that on a weekly basis, I've drawn in before this trend line, which only has 2 touches, which could cause some problems up around 55. You know, 55 plus this trend line maybe cause some issues, but really there's not a lot stopping us before we start talking about just a retest of these, you know, these previous peaks. You know, pretty much around, and I note that Goldman Sachs had a price target around 63, and they may well be looking at these previous targets here. My apologies. I think their target for 63. I think that was in Brent actually. So that would be a little bit lower on WTI basis. That'd be more like 61 or something on WTI. Okay, so anyway, moving swiftly on to Bitcoin with some of the craziest price action. Again, we're analyzing gaps, and if you read the research report from the team, you'll note that we mentioned this weekend gap was no longer a positive one. So let's just remind ourselves what we're talking about here. We talked about this last week. Let me just take this off. Where we gapped up, held on to the gap. You see over the price action, we held on to it, pretty much stayed within the gap, didn't close the gap, gapped up again, and these keep happening every weekend. So gap, weekend, gap up, weekend, gap up at the weekend gets even bigger. We test the top of the gap and don't even come close to filling it. Here we do actually drop through the gap, but it gets bought into heavily, and we get this last move up here, and then over this weekend on Sunday we gapped down, Saturday rather, we've gapped down, and we're seeing some pretty heavy action, and as luck would have it, we're actually kind of testing support at the opening of the previous gap up. So, you know, this looks a bit more bullish, a little bit more bearish for once in Bitcoin. There's a lot of dip buying that happens in this this cryptocurrency. So getting permanently bearish is probably a bit soon for that. But still, it's quite a heavy sell-off. You tend to get some big dip buying. I would be interested in getting back to these previous highs and see these old lows through here, and see what can happen in this kind of zone. There's a few peaks through there on this kind of 1 hourly basis, and then these through lows. And I wouldn't be surprised if we get back up and we actually test the underside of this gap. And that would be interesting. That would be an area that's not fairly low risk in terms of its distance from the old highs, depending on obviously or other risk management techniques being employed for at least a re-challenge of the low. So if you've got a big bounce after this sell-off, let's see, where would that actually take us, assuming that we've hit a low now, which we probably haven't. Interesting. So perfectly the 61.8 and the 50-hour moving average. That 50-hour moving average is probably going to shift around a bit, but you know, this seems like it potentially could be an area to sell into if we get a rebound. If being the operative word, and again, selling Bitcoin, definitely a fairly high risk, but a calculated risk. Given that we've just had a steep sell-off, we might get a kind of, you know, you get a kind of A, B, C. So if there's a C, could be very interesting. And so that comes in. So where is the 61.8 comes in about 38,200 roughly. So let's see how that all plays out. It does. I mean, it does. We've basically, the other thing I meant to mention here is you can see I've drawn the round numbers here. So we hit 40,000, dropped, pushed up, weren't really able to make too much progress below 40,000, and it was after this candle here where we fell back below 40,000 again, is where we then gapped down, having failed to hit. So it could be that we hit 30,000 again, and then try to move up and make the big move towards 50,000. You can see on this 4LA chart, was the big market points have been 40,000, then 30,000 was in this gap. This gap was like 25,000, and then these two gaps before we finally really started to rip were just before 20,000. So yeah, we hit 40,000, you know, a drop down to 20,000 again, a 50% drop in Bitcoin. You know, stranger things have happened. Even so, we're pausing at this gap at the moment. Even a drop down to 25,000, which was the kind of prior gap, and maybe that hasn't been filled at all. So the market might be looking to fill that gap down towards 23,400. So imagine if we got a bounce up to the 61.8, 38,200, and then we came down to fill that gap down to 23,400. You know, that would be pretty tasty. Let's see how it all plays out. Finally, the S&P 500, and you know, it was a very bullish week last week. We closed at record highs. We nudged above the rising trend line through the highs that we pinpointed last week, but only just. And now we're kind of trending down a bit. So if we get a close above it and then a close immediately back below it again, you know, it's not the most powerful signal ever. So let's see what today's price brings us. If we get a kind of a decent sell-off, basically a false break of our rising trend line, that, you know, that could be a decent bearish signal to again go counter trend. For the time being, though, we're assuming the uptrend continues. And we've got a kind of rough channel in place here. So again, a kind of rough idea as to where to, if you are going counter trend, when to target it, or if you're just waiting for an opportunity to buy into the uptrend, you kind of got this channel as a basis to play with at the moment. It's been a bit more low volatility in the stock market, in the S&P 500. It's overall been pretty bullish, and so you know, people are still looking for that kind of big opportunity to find the top in the stock market. You know, certainly no clear evidence yet, but we've got our rising trend lines in here. We've got our rising channel. A failure to break out through the top of the channel, and then a drop through that bottom rising channel line again would be a couple of signs for us, along with this RSI resistance zone at 70 that we've been pinpointing. You know, that would be some evidence of a top coming in. Okay, let's call it a day there. Thank you very much for watching, everyone. Good luck trading this week. See you at the same time next week. And of course, if you do enjoy these videos, click the like button and make sure to subscribe to the channel so you don't miss the next one.